Hello and welcome. Welcome to this exciting lesson on the multiple candlestick patterns. This is part of our technical analysis course. And here, last time we looked at single candlestick patterns. Today we are going to be looking at multiple candlestick patterns. One thing before I get into it, what I observe is single candlestick patterns don't work most of the times, a lot of times, while as the multiple candlestick patterns have got little better hit ratio or little better accuracy. Again, you should not be using the candlestick patterns alone for your trading. Make sure you have got this as your also thing or supporting thing or whatever. You could use this to exit your trade when in profit, but to enter the trade may not be perfect. We'll see some examples and you will get a little bit of understanding with this. Risk disclosure, as always, uh, please take this only and only as training. uh, I don't take any responsibility for your losses. Okay, now we start. Lots of graphs here, lots of charts. The first pattern that we are going to be looking today is engulfing pattern. And if you want to look at, okay, before I get into these patterns, let me talk about these numbers which are there. To make your life easy, if you are using AMI broker, there is an AFL which you could use to get these candlestick patterns. It's here. This is called Candlestick Evaluation. Okay, and it's a free available AFL. You could look at it. I'm going to be sharing this link to you. So what this has is about 45 different patterns. Okay, all you need to do is to set your parameter to select for a particular pattern, and these selections go with these numbers which are there. And to make your life easy, what I have done is I have put in those numbers against these patterns. For example, engulfing, bullish engulfing, we are going to see what that is, but bullish engulfing is 26 number here. So if you look at this 26 number, it's a bullish engulfing, so on and so forth. Okay, so what you need to do to get these patterns, just apply this chart on a blank chart, and then what you do is go to parameters, put a number 26 here, and you're done. As soon as you put 26, you will get all the bullish engulfing patterns that you could imagine. Okay, so we are going to be looking at engulfing here in little more details. I lost that. I had one of the good patterns that I wanted to take as an example, and then I lost that. Doesn't matter, I get another fairly good example. Let me just go there, here, and then increase. Okay, so what happens here, if you look at this guy, there's a star here. If you would see, all the patterns will be shown with either star or arrow or whatever you want. I've changed the arrow to star. So here you have a trending move downwards, and then what this means is every day morning people are coming in. They are coming just to sell their stocks that they have. They open, they sell, and then they go home. Okay, that is what is happening for many days here. Now one day, the next day, what happens is they come here, they open lower than the close. This is the close. I think you remember the candle. They open lower than the thing, and they start selling. But then what happens at the lower point of the day? Somebody comes in, bull comes in. Maybe it could be LIC, maybe it could be Rakesh Jhunjhunwala, it could be anyone. And then they start saying whatever people are selling, I just want to buy. And then with that push, you are able to close the day above even the open for the previous day. Okay, So you are engulfing the previous candle, the body of the candle is engulfed. You have a lower open than the close of the previous day, and my today's close is higher than the last day's open. Okay, so this is the bullish engulfing pattern. Hmm? I hope you understand. And this is a reversal pattern after the downtrend. It should reverse the trend up. It will come into uptrend. Just to show you some more places, some more examples of the engulfing patterns. See, for example, here you have the engulfing pattern, but then there is no trend. It actually has reversed. This is not the perfect place to look at it because it's not at the bottom of the chart. It is bullish engulfing, very nice. See here again, good bullish engulfing, but then you don't have the follow through to it. It's not working here. This place, it is, there is a doji is engulfed. A doji is basically a confusion. So although you have a downturn, people are now confused here, and with that confusion you have engulfing and then the start of a major rally. Okay, uh, see, this is a beautiful engulf, but then it's not in the end of the downward rally. This one is good, downward rally, engulf, bullish engulf, test of the engulf lows, and then continuation rally. Okay, here downward move, little bit of confusion, dojis, engulf, and then test of the those lows, and then stop of the downward. Actually, there should have been good rally there. I would have bet for that rally here. The downward move, engulf, and then the rally. Again, you have got sideways move, one more, sideways move, one more engulf, continuation of the rally. Let's look at the bearish side of the story. Let me go to my presentation. Bearish engulfing is exactly same. Let's show it on the chart here for you. 22. Okay. Okay. Let me choose the one that I want to show you. I actually had one of my teachers who used to remember all these things, and then it was much easier for him to show us as to how the things are going in. I'm little poor in memory, so I choose to rather use AFLs to help me find these places. Okay, I'm looking at rally and then a nice engulf to stop that particular rally, and then start of the, okay, this looks to be very much close. So let me, here. Okay, this is an up move. You had a question to the up move, but then continuation of the up move. And now what happened is, above the open, this is a close of the day, right? Open of the day, close of the day. That's why it's a green candle. Now above the close of the day you open, assuming that the upward move is going to continue, and then you start going up, you cross that candle, and then the sellers have come in, and then they just said sell, 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 and this closes below the open for the previous day. This shows major turn of momentum bearish. Another thing, you would look at it, it took 1 2 3 4 5 6 candles to reach there, and just one bear candle has taken over all the effort that the bulls have done in. So now there is a very good chance that you would see a downward move from here. So that is what you have seen. Bearish engulfing, uh, typically what happens is, in Nifty, I would look at bank Nifty for this. I could get better. Nifty is seen with a lot of up move. So it's little difficult to get the bearish candle patterns on Nifty, especially here. Here is a beautiful bearish engulf. See, you have an up move, tuck, 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 tuck. Now open above the close of the previous day, test the high of the previous candle, go up, and then the bearish push comes in and closes below the open of the previous candles, engulfing the green candle, which is called bearish engulfing. You have got another bearish engulfing here, but this is not so interesting because it is not at the top of the rally. Okay, so this is a bearish engulfing, is also a change direction pattern. Now let's look at piercing and dark cloud cover. The difference between piercing and dark cloud cover is that these guys are exactly the same, except that the bulls don't have sufficient energy, sufficient power to actually take over the complete candle. Okay, so for example, I am showing you the piercing on the bank nifty. Let me get bigger. Okay. So you have a kind of a down move here. You had open, which is below, just like engulfing open, below the previous candle. Then you test and then you start going up. But here you are not able to cross the open of the previous day. But you are able to cross about 50% of the previous day's candle. So although you have a downward movement and then you are piercing that downward movement, the only problem that you have is that you are not able to completely take it over. So that is the piercing for you. Hmm? Here, see, you have open and then tried piercing. This, I'm not very fond of this particular pattern. Does not work for me all the time. Dark cloud cover exactly the same on the downward side. Okay, let me show you here. So you have an up move, and continuation of that up move, you open above the candle, and then you are able to close lower, but you are not able to take over the open of the previous candle. So there is bearish strength, but this bearish strength is not all the way powerful as much as the engulfing pattern here. See, you open above on the uptrend and then you close more than 50% of the body of the previous candle. This is the dark cloud, just same as piercing. Again, I don't find this to be working so much often, so I do not want to see here. It actually works. Uptrend move, then a dark cloud, and then the change of direction. So please use this with a little bit of caution. Does not work all the while, but then it gives you an indication of who is in control. Let's go to the next set of candle pattern. Harami. This is not Hindi harami. Harami in Japanese is called baby. Okay, and harami looks very much similar to a mother with baby in her stomach. So it just looks similar. Let's look at this 28. You will understand it little better if we do it here. Okay. Okay. Harami actually works better than the piercing pattern. That's my 5 cent of knowledge or wisdom, whichever you want to call it. After looking at so many charts, see this one. What this guy is, you have this body of this candle. This is the mother and the child, which is smaller than the mother. You have a downward move and then a green candle inside a red candle. This is your bullish harami. Okay. Mm, see, this is a beautiful harami with the change of direction. Okay, you have a candle inside the red candle, and then you see change of direction here. Candle inside candle within, like a baby, change of direction. Okay, here it failed. Hmm? The next pattern is bearish harami. Same thing, number 31. I'm just going to change it to 31. See here, you have a bull candle, green candle, and then the next candle, the baby candle, which is inside the body. You just look at the body of the candle, needs to be inside. So from the up, here you see the change of direction. Here, beautiful. You have an up move, and then here, oh, uh, I know why I'm getting all these kind of things. I was on 5-minute chart. Now I'm on a daily chart. See here, you have an up move, complete clear up move. You have a harami here, bearish harami, change of direction. Up move, a bearish harami, change of direction. Up move, a bearish harami, change of direction. See, you would see a lot better on daily charts. See, beautiful up move, and then here you have, let me make it bigger. See, this is the baby which is inside the mother, and which is red compared to green mother, color change, down move start. Okay, this is your harami, my friends. Let's move to gaps. See, gaps, I have got here multiple numbers. So if I quickly show you here, what these guys have done is normal gaps, then big gaps, huge gaps, and then double gaps. I'm going to be showing you today probably big gaps and the double gaps. So 39 and 40 we will see. Gaps work excellent. Okay, believe me, uh, 39, and they work beautifully in Nifty. Gap basically says that today morning the bulls have decided to come and just conquer the world. Okay, they have said, I'm tired of it. I want, okay, see, these are two places where it's not worked. We'll come back to these just in a second. So bulls have decided that today I am done with all this selling. Hmm? Now this price is completely unfair to me. I have to go above. So they open above, and then they just keep on buying, and it closes. If this is a solid green candle, and if there is very little or no shadow below, then you can actually be very, very sure that this particular trend is a change of trend, and there is a very good chance that the trend will continue, and this continues for a very long time. There were couple of other gaps that we saw just now here, hmm, where it did not work the same way, so it opened. Now what happens is sometimes market opens little bit too much with the gap up, so all the power that the bulls have, they have exhausted all the power on the same day, same opening, and then probably pushing everything. And then what you have is a reversal. So please be very little careful when you have got huge gaps. There is a probability that the huge gaps get filled up immediately. Here also see, you have got a huge gap up opening, opens here, and then what happens is that gap bulls are not able to sustain that. Sellers have come in, and then sellers have actually showed this as a red candle, dar 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 dar, and then it goes down, reversal of change. Okay, so this is a huge gap, upward gap. 39 is what we looked at, big gap. And then we want to look at 43, which will show us double gaps. Okay, so let's look at 43, and then look at the double gaps. Here, see, one gap up, solid candle, another gap up, solid candle, perfect set. You can definitely go long with this. The stop loss could be bottom of this second gap. Okay, you could easily go long with it and you will make a lot of money here. One gap, two gaps, go long. One gap, two gap, go long. But then very quickly it has come down. Here, one gap, two gap goes up. One gap, two gap goes up. So these double gap ups, they also work very well. One gap, two gap goes up. Hmm? Let's look at the short side of the story. Big gap down 40. I don't think on Nifty you will find much of these, but let's see. 40. Oh, here. See, this is a big gap. Big gap down and then continuation. You are right there where you need to be. Hmm? Here, give big gap, but the gap is little too bad. Too bad. Reversal of the direction. So gaps are showing. See, big gap, reversal of the direction. Gaps actually show the emotion and the power of the emotion of the participants. If they exhaust all the emotion right now, they'll probably reverse. Otherwise, it shows that it's good enough emotion and it will continue. Let's look at the double gap downs, which are 44. Okay, there are six patterns on the Nifty chart. See here, one gap down, two gap down, continuation, one gap down, two gap down, continuation, one gap down, two gap down, continuation. So most of the times, two gap downs, two gap ups, they work beautifully well, except for this scenario, one gap down, two gap down, reversal. So the good part of these gap downs is you also know where to put the stop loss. Okay, when we have looked at the gap downs, let's quickly look at the next chart pattern, which is a three candle chart pattern, the star. In the star, what really happens is, let me just quickly zoom in this itself and then show you what happens is. Here you have a red candle, downward movement, a good thick red candle, and then a doji kind of thing. Doji, sometimes spinning top. Doji is better all the time. And then after the doji you have another gap up, and then you close above with a green candle. This is called as morning star. If you just reverse this, this becomes evening star, where you have got upward move, green candle, and then a doji above with a gap up, and then after the doji you have got a downward gap with a red candle close. So this evening star will show us a downward movement. So if you Nifty is not the best place to see it, let me try with Axis Bank. I've just chosen anything. I've not done my homework. 25 and 30, 25 and 20. So this is 25. You have got five doji morning stars. This is one. See, down, doji, and then green. But it's not changing the direction so well. Again, the same thing here, but not changing the direction. Again here, not changing the direction again. So this place is not the best place to look at for the morning stars. Let me try. What should I try? Britannia. Okay, seven of them. See here, there's a decent enough morning star. Let me actually look at Nifty only. Okay, beautiful. Nifty gives you what you want all the time. I always love this guy. See, three in a row. See, downward movement, doji, and then the green candle with a gap up. Morningstar, beautiful Morningstar direction covers. Same thing happens again, a doji and the green candle to change the direction. Again here, downward movement, thick red candle, doji, and then reverse of direction with a green candle. Change of direction is seen for many candles ahead. So this is the morning star, my friends. Let's look at the evening star. Five patterns. Where are you? Here. Ah, okay. Same pattern. A thick green candle, a doji, and then gap down opening, a red candle. This is an evening star. It looks like a star. Here, same thing. See, upward move, evening star which has failed, and then continued the direction. On Nifty, evening stars would not work as that good as on some of the trending stocks or the stocks which have got tendency to go down. Here, see, thick green candle, then a doji, small candle spinning top, and then a thick red candle, the reversal of direction. Beautiful evening star. Here it is. So now what we have done, we have seen the engulfing patterns, we have seen the stars, we have seen the gaps, and we have seen the harami. These patterns, what I would say is, please use it only with a pinch of salt, because they do not work all the time. They work sometimes, they sometimes don't work, and they actually make your life little difficult. So in anyways, you have the resources, these are the same as the last time. Have a great time, come back for more. We will next time onwards, let me just quickly show you what we are going to be looking at. Here is your syllabus. We have done till chapter number 10, multiple candlestick patterns. So we've done the introduction, we've done the chart types, the single candlestick patterns, multiple candlestick patterns. Now we are going getting into a very interesting thing, support and resistance, volumes, and then the indicators, averages, and all these things. Okay, have a great time, enjoy your day, enjoy your trading. Bye.